You think when you swipe your card, money just leaves your bank account, right? That somewhere behind the scenes, cash is moving from your pocket to the stores. But what if I told you that money doesn't exist yet? Not really. When you pay, you're not spending someone else's money. You're creating it. Just like that. Sounds strange? It should. Because the truth about money is, money isn't what you think. This matters more than ever. As billions of transactions happen every day, the global economy depends on this invisible trick. But if the system behind your swipe suddenly broke, everything would grind to a halt. No payments, no salaries, no groceries. So who actually creates money when you swipe your card? And why does that change everything? Let's start with the banks. Most people picture banks as vaults full of your cash, but that's an old idea, like thinking the internet is just a place to send emails. Today's banks are more like money factories. When you swipe your card, your bank doesn't hand over cash stored in a vault. Instead, it creates a digital promise, a new entry in a ledger. Suddenly, the store's account grows by the amount you paid, and your account shrinks if you have the funds. If you don't, well, the bank might still approve the payment and create that money out of thin air. That's called credit. Here's the kicker. Banks don't just shuffle existing money around. They manufacture money by lending it. Every loan is new money. The moment a bank approves a loan, new money enters the economy. That's how most money is created today, through debt. You probably thought governments printed money, right? Sure, central banks print physical bills, but that's a tiny fraction. The real engine is commercial banks creating digital money with every loan. And it's not just personal loans. Mortgages, business loans, credit cards, all these inflate the money supply. When debts are repaid, that money disappears. The system is a constant cycle of creation and destruction. It's an invisible dance billions depend on, yet it's built on a fragile promise that debts will be paid back. Now, here's where it gets uncomfortable. Because this system depends on endless growth. If banks stop creating loans, money supply shrinks and the economy can stall. But constant loan creation fuels debt, bubbles, and crises. Imagine your swipe fueling this high-stakes game. Your purchase isn't just a simple transaction. It's part of a massive, delicate balance where money only exists because debt exists. There's irony, too. When you pay with your own money, it vanishes. When banks create money by lending, it appears. But that money comes with strings attached, interest. The system ensures some people always owe more than they get. Zoom out, and the stakes skyrocket. This system powers everything from your morning coffee to global trade, but it also amplifies inequality, fuels financial crises, and traps economies in cycles of boom and bust. And it's all invisible. Most people never stop to ask, who creates the money I use every day? Because understanding that changes everything. So, next time you swipe your card, remember, you just created money. But the question remains, what happens if the factories stop, if trust falters, if the endless cycle of debt and creation breaks? No one really knows, and that uncertainty might be the most powerful force behind every dollar you spend.